Today, let's talk about Narayana Hrudayalaya. They're a huge name in Indian healthcare, and right now they're in the middle of a really fascinating and you could say pretty ambitious strategic shift. We're going to break down their plan, look at the arguments for it, the bull case, and then the arguments against it, the bear case. Let's get right into it.
So, here's the big question right off the bat. Is Narayana Hrudayalaya a hospital? Is it an insurer? Or is it trying to become something completely new? A combination of both? This question, really, is at the absolute heart of their transformation, and it's what we're here to unpack today.
Okay, so first up, let's talk about this strategic pivot. The company is fundamentally changing its business model, moving away from just being a chain of hospitals to becoming a complete healthcare ecosystem. So what's the big idea here? The goal is to build a complete healthcare ecosystem, and you can see their fundamental state is rated as strong. Now, that's really important because it tells you their core business is healthy enough to even attempt such an ambitious move. This isn't just about adding a few new services. It's about totally reimagining the patient's entire journey. And this diagram here shows you the new model perfectly. You see, NHI is integrating the provider role, that's the hospital itself, with the payor role, which is the insurance company. This whole approach, which is actually inspired by the Kaiser Permanente model over in the US, is designed to tackle that huge trust deficit in Indian healthcare. By controlling the whole process, the idea is to build more trust and efficiency.
All right, so that's the strategy. But why should it work? What are the arguments for it? Let's dive into the bull case and look at the company's engines of growth.
First things first, the core business is doing incredibly well. Just look at this profit trend. For Q2 of the 26 financial year, they saw a 30% year-on-year jump in net profit, and that was backed by record EBITDA margins of almost 26%. In simple terms, that means they're running a very, very tight ship. They're operationally excellent.
And this right here, well, this is kind of the secret sauce of the new model. They have their own insurance product called Aditi, and what it does is create a captive patient pool. You've got this guaranteed volume of patients coming in, which lets them manage their resources way better and actually lower the cost per patient. And of course, that makes the insurance product even more attractive. It's a beautiful, self-reinforcing flywheel. Now, another huge strength is their international business. While the Indian operations bring in the volume, their facility in the Cayman Islands is what some analysts are calling the crown jewel. It's a high-margin business that earns in US dollars. That acts as a powerful dollar hedge. And, maybe more importantly, it provides the cash to fund all their expansion plans back home in India.
And they are absolutely putting that funding to work. NHA has announced a really aggressive capital expenditure plan of 3,000 crore rupees. And what's the goal? To add another 2,000 beds by the 2030 financial year, focusing strategically on their core markets like Bengaluru and Kolkata.
And finally, there's a potential tailwind from the government. The 2026 union budget talked about creating new medical tourism hubs. Now, since NHE is already a leader in complex fields like cardiac and oncology, which is exactly what attracts international patients, they are perfectly positioned to benefit from this. And as this projection suggests, it could give the revenue a significant boost. Okay, but it can't all be smooth sailing. Every big strategy comes with risks. So now we have to flip the coin and look at the bear case, the potential headwinds they're facing.
Probably the biggest concern for a lot of people is the valuation. The stock's price-to-earnings ratio is floating around 42 times, which, as you can see, is well above the industry average. What that means is the stock is basically priced for perfection. There's very little room for any mistakes or bad news.
Another real challenge is the rising cost of doing business. This chart breaks down their operating expenses, and you can see that employee costs have now hit 20% of the total. This isn't just an NHS problem, it reflects a much broader talent war across the entire healthcare sector, and it puts constant pressure on their profit margins.
And there are a few other risks that investors are keeping a close eye on. First, there's execution risk. With the recent acquisition in the UK, the Practice Plus Group, it's a very different market. Second, that big CapEx plan could squeeze the return on equity in the short term, especially if those new beds don't fill up as fast as they hope. And lastly, a small reduction in the promoter's stake has made some investors just a little bit cautious.
So when you put the bull case and the bear case together, what's the long-term verdict? Well, it really all points to a massive structural shift in their business. I think this quote from the research material just captures the long-term vision perfectly. The goal here isn't just to build a bigger hospital chain, it's to become this integrated platform that manages everything from the insurance policy all the way to the treatment. to effectively become the Amazon of healthcare for India.
And this is why, despite all those short-term risks and that high valuation, the company is still viewed by many as a quintessential long-term compounder. And the proof is right there in its history, a 240% return over the last 5 years. It shows a real track record of creating significant value for investors who stick around for the long haul.
So all of this leaves us with one final big question. What Narayana Hrudayalaya is doing is more than just a corporate strategy, it's really a bold experiment. So the real question isn't just whether the company itself will succeed, but whether this kind of integrated model could actually redefine the entire future of Indian healthcare.